Welcome back to the channel. Today we're going to talk about Fiserv, a major player in the financial services and payments ecosystem. While it's not a flashy AI stock or a hot tech startup, Fiserv quietly powers many everyday financial transactions, and investors are now watching closely as it heads into its upcoming earnings report. The stock has recently faced pressure, and analysts' expectations are raising some interesting questions about its near-term performance. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Analysts are forecasting that Fiserv will generate roughly $4.91 billion in revenue for the next quarter. What's important here isn't just the raw number, but the fact that it represents flat growth compared to the same period last year. This is a slowdown from last year when revenue grew about 6.6%. For a company like Fiserv, which is considered a stable and mature player rather than a high-growth disruptor, flat revenue is not alarming, but it does highlight a potential loss of momentum. On the earnings front, analysts expect adjusted earnings of $1.90 per share. Even with slowing revenue, the company is projected to maintain profitability, likely due to operational efficiency and cost management. However, earnings expectations alone don't tell the full story, especially when revenue growth is weak. To understand the cautious outlook, we need to look at Fiserv's previous quarter. The company missed analysts' revenue expectations by nearly 8%, reporting $4.92 billion in revenue, which was flat year over year. This indicated that the growth slowdown wasn't just a one-off. After that miss, analysts have largely kept their estimates steady over the past 30 days, signaling a wait-and-see approach rather than aggressively revising projections up or down. While analyst estimates have remained stable, the stock price has not. Over the last month, Fiserv shares have fallen about 12%, a larger drop than the broader financial services sector, which is down roughly 3.7% on average. Currently, the stock trades around $60, which is well below the average analyst price target of $80.37. On paper, this suggests potential upside, but price targets are assumptions, not guarantees, and the market may be factoring in additional risks. Looking at peers provides further context. Jack Henry, a company in a similar space, reported 6.7% year-on-year revenue growth, exceeding expectations by 1.3%. Investors responded positively, pushing the stock up over 4%. Meanwhile, Capital Southwest reported even stronger revenue growth of 18.2%, beating estimates by 5%, yet its stock remained flat. This shows that strong results alone don't always drive share prices higher in the current market environment. Zooming out, the broader financial services sector is under pressure, reflecting economic uncertainty. 2025 has been marked by debates about the health of the economy, tariffs, corporate tax policies, and other fiscal decisions. These factors directly affect profitability, investor sentiment, and valuations, and companies like Fiserv are not immune. As Fiserv approaches its earnings announcement, expectations are cautious. Investors will be watching closely to see if the company can meet or slightly exceed revenue and earnings forecasts. Management's commentary on client demand, transaction volumes, and cost trends will likely be just as important as the headline numbers. A clear explanation of why recent weakness is temporary rather than structural could help stabilize the stock. To summarize, analysts expect flat year-over-year revenue of about $4.91 billion and adjusted earnings of $1.90 per share for Fiserv. The stock has already dropped roughly 12% in the last month, trading well below the average price target of $80. Meanwhile, peers like Jack Henry and Capital Southwest have delivered stronger growth, though market reactions have varied. All of this unfolds in a broader environment of economic uncertainty and sector-wide pressure. For Fiserv, the upcoming earnings report is a key moment, not for explosive growth, but to reassure investors that the business remains stable, profitable, and capable of navigating challenging conditions. Whether the market rewards that stability or continues to demand stronger growth remains to be seen, but this report will definitely shape how investors view Fiserv in the coming months. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.